So after 3 straight days of record highs, markets finally hit the brakes yesterday. Hey everyone, it's Wednesday morning, September 24th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Sella, here to break down yesterday's market action in just 2 minutes. Quick note before we dive in. Today's episode is brought to you by AMF Capital Asset Management Frankfurt. Learn more about our funds and strategies at amf-capital.de. Alright, let's get started. On Tuesday, U.S. stocks pulled back as Federal Reserve Chair Jerome Powell reminded investors that, hey, nothing in this economy is risk-free. The Dow slipped about 0.2%. The Standard & Poor's 500 dropped roughly 0.6%. And the Nasdaq fell almost 1%. Not huge moves, but definitely a pause after Monday's big rally. That rally, of course, had been powered by excitement over artificial intelligence, with NVIDIA's plan to invest at least $100 billion in OpenAI, fueling plenty of optimism. But Powell stepped in with a bit of reality check. During a speech in Rhode Island, he said the Fed is going to move cautiously after last week's rate cut, pointing out the tricky balance between inflation and jobs. He put it simply. Inflation risks are still leaning to the upside while employment risks are tilting down, and there's really no risk-free path forward. And then he added another eyebrow raiser. Stocks are fairly highly valued by a lot of measures. That line definitely cooled some of the enthusiasm. Looking ahead, everyone's waiting for Friday's release of the Fed's favorite inflation gauge, the Personal Consumption Expenditures Index. That will be the real test for whether 2 more rate cuts are still on the table this year. Meanwhile, fresh data on Tuesday showed U.S. business activity slowing down, while costs for materials jumped. A reminder that price pressures haven't gone away. So the markets are basically saying, we've had our fun, now let's wait and see. And that's where we'll leave it today. Alright, that wraps up today's Capital Markets Quickie. Join me again tomorrow morning for more market updates. See you then.